What is up, guys? It's Migs with Market Open. Today I wanted to talk a little bit about what to do if the market starts selling off. So, as many of you know, last Friday we had a huge sell-off and we had a lot of people starting to panic, a lot of people losing money because they just haven't really dealt with this pullback in a while. It's the biggest pullback we've had in about 2 years or so. And like 90% of the market, everybody's used to going long, so buying low and selling high. Then if things tank, they're all out of luck and they don't really know what to do. So instead of doing the recap today, I wanted to talk about that. I was almost flat, but actually I came out up $130 because I know how to trade exchange traded notes. So that's something I haven't really traded in a while because the market hasn't really pulled back that much. But now that it is starting to pull back a little bit and we're starting to see a drawback on a lot of the buying, it's something that you want to take advantage of. So I know a lot of you guys are familiar with what are ETFs, exchange traded funds. They're basically, they back certain things like gold, rice, are the things of value that are not um, they're not basically stocks. So it kind of follows the price of that index and it goes accordingly. So now VXX is an exchange traded note that's actually backed by a bank. So let me get you guys the exact definition. So I'll pull it up here. So exchange traded notes, or ETNs, are a type of unsecured, unsubordinated debt security first issued by Barclays Bank PLC, based on the performance of a market index minus applicable fees with a period of coupon payments distributed and no principal protections. So similar to exchange traded funds, ETNs are traded on the major exchange such as New York Stock Exchange during normal trading hours. So basically what that means is that when the market opens, VXX, what it does is actually an inverse ETN of the SPY. So that's why I have the SPY pulled up. So it's basically, it moves twice as fast as the SPY does because obviously the SPY doesn't really move that fast. So now I took a couple of trades. CVX, actually a good win on XNet right off the bat. Good trade on CVX. But then also, when the market started turning around and not going as high, I took a small loss on SQ, a small loss on Twitter. And this morning I did take a normal size loss on WFC, which is Wells Fargo. Now, I was basically flat on the morning. I think I was maybe up like $8 or so. And I remembered, hey, if the market is not going to go any higher, if it starts going down, I can trade the exchange traded note VXX. Because if the market goes down, VXX goes up. So what I did is I noticed, so I looked at the SPY, and this morning we hit a high. So I'll draw these lines out for you guys right here to 275.85, I believe it was. Yeah, 275.85. So we pulled back a little bit. We tried to we tested that high again, but it didn't break it. So then I noticed around here in this area is when I took that loss on Twitter and SQ because it pulled back. It started going back up, but then it actually came back down. So in the SPY, 80% of the stocks that are in there are going to follow it. Or actually, yeah, so 80% of the stocks in the market are going to follow the SPY. So if it goes up, they go up. If it goes down, they go down because it's all as a group, they're all kind of moving together according to the market. So I noticed that it wasn't breaking the highs. And this right here was basically making a lower high. So this is the high, lower high, lower high. Now, I noticed that it was sticking also, it was trending with the 9. But if it broke below that we were going to start heading back down. So because it tried twice and it didn't break the high. So now I switched over to the VXX. And if you notice on here, it is exactly the same, just it moves twice as fast so you can actually take some profit out of it. So this is the low of VXX, which is the high, and so this is its attempt of trying to break that. As you can see, there's 25 cents difference right here. So I said, okay, if it goes over, I think I said 32.80, I was gonna get in. So down here, yep. So I got in right here at 32.79, and that's when the SPY actually started breaking down here. And my stop was actually going to be over the highs here, which was this 32.50 mark. So my risk was about $100 right in here. And so what I did, my target was going to be actually VWAP. But since we had such a big red day on Friday, I decided, and I was already flat on the day, so I decided to take anything that was over 1 to 1. So I took 1.2 to 1. So what I did is I held it. I went long on VXX here, expecting the market to start pulling back, and I got out somewhere in 33.20, right around there. So I took it right around here. Not much, a little bit more than 1 to 1. But that in itself, and knowing how to trade the inverse of the market, changed my day completely. So instead of being flat or losing money, I was able to actually take a profit out of the market, just because I know that there are actually ETFs out there as well. But I chose to trade the VXX because it moves faster, and it actually it's higher priced as well. So then I know that there's a bigger ATR, which is basically the range of that it moves in. So as you notice here, it came all the way down to 32 to 34. So I have enough capital to be able to buy 1,000 shares if I wanted to. If I would have called the bottom on this, I could have made $2,000 here. But obviously I'm not trying to call the bottom. I'm not a magician. I do the best as I can and try to recognize patterns that I can, and just base my risk off of some sort of previous candle or some previous support. So I went ahead and took, what was it? Took $120 out of it, and then that definitely made my day. So now, also I wanted to point out, what was it? TVIX. Yeah, so the TVIX here is also, I believe this is actually an ETF. Yeah, so this is actually an ETF. This is actually something that you can trade if you have a smaller account. So it's basically the inverse of the SPY as well, but it's lower priced, and it moves, I don't know if it's either 2 or 3 times as much as the SPY, but obviously it's a lot cheaper. So here, let me show you guys the daily, what this looks like. So obviously we've been on a crazy run for the bull market, so it's the complete opposite of the SPY. So if I put this on the 6 month, you guys will notice that they're just complete opposites. Yeah, so this is definitely something that you can take advantage of if the market does start turning around. And so you don't have to pull all your money out. You can actually just transfer your funds into something else like an ETF or an ETN to be able to make profits when the market is pulling back. So you don't have to be afraid of the market pulling completely back or selling off. All you have to do is just shift over your money and your capital into something else that is the inverse of the market. So yeah, just take a note of that, and make sure you write that down, because we will have bigger pullbacks here soon. I'm sure of it, probably sometime this year. Do I know when? No clue. Absolutely no clue. But I can only react to when it happens. So yeah, if you guys do have any questions, make sure to leave it down in the comment section below. Also, make sure to join our Facebook group as always. I answer a lot of questions on there. I leave my watch list on for you guys. It's just a community of like-minded people to be able to share your ideas and all your trade ideas. Basically, we have swing traders, day traders, investors, all sorts of people in there. We're actually almost to the 2,000 member mark, and it's completely free. So the link will be down in the description below. And hopefully you guys learned a little bit from this and help you guys profit. I'll talk to you guys later.